Move on to the high probability strategies you can use with it. And trust me, once you learn these, you'll immediately start getting more accurate entries on your trades. So pay close attention. Strategy number 1. One of the most effective ways to use the Heikin Ashi is by combining it with key levels. Key levels are areas where price tends to react from. Examples of key levels are support resistance, trend lines, and confluence zones, which is where multiple key levels converge. Now, when trading this strategy, it's very important to draw these levels on the real price chart, not on the Heikin Ashi chart. That's because key levels must be based on the real price movement to stay accurate. So here's how we're going to trade this setup. The first step is finding a key level, and one of the easiest way to do that is to look for a level where price has clearly rejected before. So, whenever you see the price move towards a level and then move away from it significantly like this, that's a valid key level, so we can mark it using a rectangle. In this example, it's called a resistance because the rejection is on top. Same thing with the opposite. Whenever we see price move down towards a level and then moved away from it significantly, that's called a support because the rejection is on the bottom. So, once a key level is identified, the next step is to wait for price to revisit that same key level. Like this. Now, since price has bounced off this level in the past, there's a good chance that it might bounce again due to the buying pressure on this support zone, which means we can potentially look for a buy setup here. But of course, we can't just enter immediately because there's always a chance that the support level doesn't hold and price might break through it instead. So, how do we know if price is likely going to break or bounce? This is where the Heikin Ashi comes into play. Once we've found our potential trade setup, we move to step 3, which is using the Heikin Ashi for confirmation. So let's apply it side by side with the regular chart. Now, the key here is to watch how the Heikin Ashi candles react when price is at this support level. Here, the candles are still colored red with large bodies and no upper wick, which means the downtrend is still strong, so it's better to avoid buying. However, after a few more candles formed, we can now see that the body starts to shrink in size while upper wicks begin to appear. This shows that the downwards momentum is getting weaker. After that, the candles started turning green, and we can see one without a lower wick. This further confirms that the momentum has shifted from a downtrend into an uptrend. Now, remember what I said earlier in the video, it's better to enter a trade when the Heikin Ashi candle's body is still small, because it shows that the trend is still early. And that's exactly what we're seeing here. So now, we have the Heikin Ashi confirming a potential trend change while the price is at support, which means we can now move on to the final step, which is the entry. For our entry, we can place a buy position at the current price, set our stop loss at slightly below the support level, and set our take profit at 2 times the size of the stop loss. And as you can see, price moved up and hits the take profit target. Now this trade was good and all, but there's actually a simple trick you can use to increase your potential gains from this trade. Here's how. Instead of fully closing the trade on this take profit level, you can instead close it partially, around 50 to 80% of your total position size. This is done to secure profits, while keeping some positions open for more potential upside. For the remaining positions, simply move your stop loss to break even. This way, if the trend continues, the remaining position will keep generating gains without any risk. To do this more effectively, we can actually use the Heikin Ashi. Looking at the indicator once more, we want to watch how the candles react as our trade is running. Right now, the candles are still green, have large bodies, and no lower wick. This shows that the uptrend is still strong, so we can still let the trade run. But here, we can now see that the green candle's body starts to shrink in size, lower wicks begin to appear, and a red candle formed. This tells us that the uptrend has likely lost its strength, which means we can fully close the remaining of our trade here. So notice that by using this simple trick of letting a portion of your positions run with the help of the Heikin Ashi, we were able to capture more of this upside move. So you can see just how powerful the Heikin Ashi indicator is. But when using strategies like this, the platform you're trading on also matters a lot. Trading on an exchange with high fees or slow execution could potentially limit another example of the strategy. Again, the first step is to find a key level. And remember what I said earlier, there are multiple types of key levels besides just support and resistance, so you can look out for any of them. And in this chart, we can see that the price is forming a clear uptrend structure because it keeps creating higher highs and higher lows. And from here, we can spot a trend line. Now, how did we know that there was a trend line here? Simple, because price had rejected this zone 3 times. When drawing a trend line, price must reject a zone at least 2 times in the past. So once our key level is identified, we move on to the next step, which is to wait for price to approach that level again. Like this. Now, since price has bounced off this trend line multiple times before, there's a chance that it could bounce again. But we can't just rely on that analysis alone, so we move to step 3, which is applying the Heikin Ashi. Looking at the Heikin Ashi candle, we can see multiple doji candles with small bodies. This tells us that price is still moving sideways, so there's no uptrend confirmation yet. After a few candles formed, we can now begin to see the transition into an uptrend, starting from a small green doji candle to consecutive green candles with no lower wick. So now, we have price touching a trend line, plus the Heikin Ashi confirming the uptrend, which means we can now move to the final step, which is the entry. So, we place a buy position here, set a stop loss slightly below the key level, and take profit target at 2 times stop loss. Here, price ends up hitting the take profit target. Now, it's completely up to you whether to fully close the position on this take profit target or just partially close it and let the rest run. The important thing is that the trade ends up profitable. Let's see another example. So again, the first step is finding a key level. And right here, price formed a lower high structure while rejecting this level multiple times, so we can draw a downwards trend line. Once the key level is confirmed, we move to step 2. Wait for price to approach that key level again. Like this. Now, notice that price has rejected this trend line multiple times in the past, so there's a good chance it might reject it again, which means we can potentially look for a sell trade to take advantage of this possible downwards move. But if you watch closely, you can actually spot another key level here, a previous support level that has now turned into a resistance level. And in the past, price has reacted to this level as well. This is called a confluence level, which is when multiple key levels line up in the same zone. This is the strongest type of key level, so the chance of price rejecting is much higher. Once the key level is identified, we move to step 3, confirm the setup using Heikin Ashi. And here, the candles are still green, showing a strong uptrend, so no signs of reversal yet. But after a few more candles formed, the candles started turning red, and multiple candles with no upper wicks begin to appear. This tells us that the trend has shifted downwards, which confirms our setup. Now we can move to step 4, which is the entry. For this trade, we can open a sell position right here, place our stop loss slightly above the key level, and set a take profit target at 2 times the stop loss. And as you can see, price moved down and hits the take profit perfectly. So you can see just how effective the Heikin Ashi is, especially when combined with price action strategies.